everybody. Welcome to Trader Merlin Show. It is your Hump Day Wednesday edition. Yes, hello out there in steamy Jersey from Jeff, Thomasina, David as well. Good to have you guys with us here, and I'm sure there will be many more here to follow as we just went live. Today's show is going to be clarity for a lot of you. Many of you have probably been watching TILLIE'S Market Outlook, which we release every Sunday at about 1 p.m. Pacific time, just to give you kind of a heads up as to weekly, 4-hour, and hourly levels of accumulation and distribution, which you might find interesting and may play into your plans for that trading week. Of course, in the release of the last 3 videos over the last 3 weeks, there has been a lot of questions that have come in, and I thought, you know what better way to answer questions as opposed to just type them into chat? We would answer those questions here with Tillie Allison today. So our topic, as you guys can see here, is TILLIE'S Market Outlook Breakdown. So we're going to break it all down with Tillie Allison today. Tillie, how you doing?
Great, Merlin. Just turn up the volume so I can hear you.
There you go. Good. Good to have you. You look all hot over there as well. Is it hot out in Kansas City?
Yes, I think it's actually hotter in Kansas City than it was in Texas. I was in Texas for the 4th of July, and my husband was there, and he said, you know, everyone talks about how hot it is in Texas. He's like, I think it's hotter in Kansas City. But I think the difference is air quality. I think Kansas City has cleaner air quality. So even though it's blazing hot, there's still actually some oxygen in the air.
But better than Houston, that's for sure.
Houston blazing hot.
Well, you know, it's a good thing that the global or climate change doesn't exist and is not real. Yeah, no, that's it. All right, let's go to, oh, the cat is on the desk today. Look at that tail. That's hilarious. Yes. Let's just start right off with some listener questions out there. We'll dive into it, and as you guys have questions, so many of you have questions, feel free to send those on in. We'll stick with, to start with, a lot of these ones that have come in from viewers over the past couple of weeks on TILLIE'S videos, which, of course, if you comment down below, not just this video, but also the chart of the week, as well as TILLIE'S Market Outlook, we'll do our best to comment on all those. Now, here you see George M's question. He had a couple this week. It says, I noticed that you are not using extended hours to draw your levels. Is that due to lack of volume traded during extended hours time? So, riddle us that, Tillie. Why are you using why aren't you using the extended hours?
Okay, I do not use extended hours when I'm looking for these areas of accumulation distribution because there's not going to be too much volume in the extended hours. And we're really looking for areas where there's a lot of orders being processed at such a high rate of speed. So the more order flow coming in at that time is going to create a stronger area of where there's going to be left unfilled orders. And we're just not going to see it very clear in extended hours. Now, later we're going to talk about the S&P futures. And in that particular market, it would be beneficial to use extended hours, but not in the spider because it's such low volume.
Great. I was actually just going to talk about that because I'm bringing up the chart here so you guys can see this. Here is the S&P futures. This is the September continuous contract. And we all know that volume during those regular market hours is generally higher. Even though it's 24 hours trading, it doesn't mean it's worth trading. There are moves, but as you can see here, volume is really, really low. And this is the futures product, which has people trading at 24 hours. If I were to go to something, let's switch this to a 5-minute time frame. There we go. There's a 5-minute, and you can see a little bit more clearly how there's a huge distinction between pre and post market and during market. But if we look at SPY, this is what Tillie was alluding to. This is regular market hours. When I switch this chart over to, let's say, a 24-hour time frame, you'll notice there's almost nothing happening in that after-hour session. Take a peek at the bottom of your screen there. I'll make it full screen for you. You guys can see there's like nothing that goes on. So a little bit different there. I, for one, will tell you that I will never, ever use the extended hours trading for the equity markets, for individual securities. But I do, and maybe this is a matter of personal preference here, Tillie. I've talked to many Chicago CME traders, and they don't like to use the pre-market or aftermarket levels for zone process. I like to look at them, and I do use them for zoning. What's your take on using in the futures market, that is, for level determination?
So for the E-mini S&P 500 futures, I do analyze the 24-hour data. And that there are obviously some moves in the overnight session, pre and post market, that are significant enough not to ignore. And I think it just depends on how much activity there is in the overnight session. I would certainly say that those areas are then confirmed after the open during the regular cash market. So I think a good way to think about it is we might get some candidates in the overnight trading, but we want to qualify them or verify they're valid and that they hold during the cash market as well. And one thing I always think about is if an area is formed overnight of accumulation or distribution, and there's a strong move away from it, well, there certainly were not a whole lot of volume because there's not a tremendous amount of volume overnight. So if that area there is then tested intraday, there's pretty good odds enhancers there.
Yeah, I agree. And I want to be clear that you don't want to put all of your emphasis on a pre or post market level, but there is a greater chance of those levels not holding. And the reason simply is because during those aftermarket sessions or pre-market sessions, the institutions aren't acting as heavily as they would during regular market hours because there's a fiduciary obligation during regular market hours to be making a market maker, or making market. That's what a market maker does. So those levels I wouldn't necessarily put all the emphasis on as far as turns, but today's a good example on that ES on the futures product. Let's go and look at that one full screen here. You guys can see I'll put a line right across the low of the day. This is the dead low of the day was 31.26, which was the dead low in the pre-market session. Really last night about 11 p.m. Is where we had an abrupt turnaround, and that's a level I'd be eyeballing as a potential turn. And today it in fact did turn on the dot to that level. So I like to use them, but I don't give as much credence or weight as I would to levels that are developed during regular market hours. And that's my 2 cents there.
Absolutely. And I think if someone's going to be trading the S&P 500 actively, likely using the futures market more for longer term investing, we're certainly looking at higher time frames like 240-minute chart or weekly charts, and we wouldn't even know the difference because think about it. On a 24-hour market, you don't even know if you're looking at the overnight session when you're looking at a 240-minute or a weekly chart where those areas are formed. It's going to be obvious as all those time zones kind of merge together on the higher time frame.
Well, and you covered on a previous session on why you use the weekly, the 4-hour, and the hourly, which was a question that I actually took off the list for today because we already kind of answered that one. Let's look at the next one. This is from Brandon out in KC. So you got a local out there asking you questions. Says, how can we use the SPY, the $SPX.X, and the ES futures together in our trading strategy? Will watching all three help us time entries or add an odds enhancer? Here we go. What do you think?
I think that each of those markets, because they're very unique in itself. So for longer term investing, we certainly want to look at the SPX and the spiders. And then for our more active trading, that tends to be the S&P futures, the ES or the MES. And the reason that you'll only on a very rare occasion, not very frequently, are we going to get alignment of those SPX and the spiders with the futures. So when there is an alignment like that, which does not happen very often, and when I say it doesn't happen very often, I would say a few times a month maybe, for those moves that happen. That's a really big odds enhancer for a really big move. But just day-to-day analysis, we're not likely to get that alignment. So we're looking for the opportunities typically on the futures markets for more active trading. And then again, going back and using the spiders and the SPX for longer term investing.
I agree. It's funny. I don't use all of those. I will say I pretty much stick with the futures. Occasionally you'll see me look at the SPY just because I want to get a sense of what that overall market is doing, but I generally am not going to be looking at the SPX.X. For some reason the cash index, I always have issues from platform to platform to platform on the nomenclature or the symbology that they use for. Sometimes it's INX.X, and then you have to pay for a data feed, so I can't get that one. I have to use SPX.X. It's been more a pain in the butt for me, so I actually don't use the SPX.X. I just will stick with the futures, and I'm looking at adjusted as well. And I'm also looking at the SPY. Again, from Tillie mentioned, I think a lot of people base their day trading decisions or shorter term decisions on the levels that are done by the SPY. So they're looking for those to have a little bit more weight in the market on a daily basis. And that's my 2 cents on it.
Yeah, so like the SPX is such a big market, and there's really no reason to look at it unless you're dealing with managing like pension plans or mutual funds, and you're really just wanting to look at the market on a chart, if you will, that is kind of referencing a bigger product. So mutual funds and things like that. If someone's referencing the SPX, it's usually because they're managing a larger portfolio, more like institutional size.
Cool. Joseph just asked, which do you prefer, SPX options or SPY options?
I trade spider options because they're more scalable. And some of the accounts I trade are not authorized to use options. So we're kind of in a situation where we may even, have to pick. I know everyone's going to boo on this one, but some of the accounts that I manage for longer term investing, I know you're going to be like, ooh, but some of them are in mutual funds because that's all the plan offers. And that's the best we can do. So I'll use the spiders if the account is optionable and it's more scalable. For a much bigger account that we don't want to scale in the SPX as a bigger product, everything's times 10.
I was trying to find the disconnect button so I could hang up on you. Mutual funds, Tilly, for the love of God. I know you have to do what you have to do in those accounts,
Some accounts, that's all they offer. And if someone's, employed by a company and they're getting matching contributions and they're vested and it's that their participation is kind of required by the employer, then if they take that money out of the plan, they're going to have to pay taxes on it. So, we can better manage those mutual funds. We can do regular reallocation. We can do a whole lot better than some think with those stinking mutual funds. And of course, we have to offset the expenses.
Absolutely, yeah. I mean, if you have the ability to get away from mutual funds, then go ahead and do it. But many of us don't have that potential because if you're stuck in a company 401k, usually it's not going to be self-directed and you are stuck with mutual funds, unfortunately. All right, yeah, I don't really have a preference in that one, Joseph. I like the SPY options just because I find them very liquid, they're inexpensive, and that's an easy way for me to get access to it. But it's just a matter of personal preference. We have a lot of guests in the program who are very into the SPX. We have the rubber ducky strategy that Tim Blotzer does, and he's just using the SPX. That's great. I wouldn't say really there's one that's better than the other. It's just a matter of personal preference. All right, Tilly, last week in your market outlook, you talked about one mark. You said today we closed within the range of the previous trading week. And we had a question out here from George, and George says, what is the significance of closing within the range of the previous week? I'll see if I can bring that one up here on the platform for us so we can see. I'll go back to, I have a Tilly page set up here so I can kind of track similar things. Last week we did trade within the previous week. We did breach the top. But what does the significance of closing within the range of a previous week mean for you?
So when a market closes inside the range, that means that there's a lot of settlement occurring at the exchange. So for the week prior, all the orders that are being placed to buy and sell are being placed within the same range. So that's a lot of consolidation. And that means that when it does move away from that range, it typically moves at a much higher rate of speed. So when a market closes inside the range, we can expect a strong move out of that area. So that close particularly that was referenced, I don't recall if it was the close near 300, but that close on a weekly close near 300 was inside the range. And whenever the market came back online, it trended very, very strongly and has rallied up to 315. So that movement outside that range now to the top of the range has a lot of momentum since all of that accumulation happened at 300 and all that sideways trading is, my mentor told me, talk about the rubber ducky. Whenever you wind up a rubber ducky and you wind it up and it gets all that consolidation, all that energy, then it just explodes.
What kind of rubber duckies you playing with? Mine are just little yellow plastic things that squeaked in the bathtub.
The wind up ones that they used to sell at the gas station in like the 1970s.
Man, you okay? All right, I like the analogy there. And I think actually I made a mistake. You're talking about I think it was this red candle here. So 2 weeks ago, where you see we closed within the range of the previous one. And for me, it's rather similar. I think that when you have 1 day's range or a week's range or a month range, just pick whatever candle time frame you're looking at. If you have, let's say, a weekly candle closes within the range of the previous one, it just tells you that this current week is a little bit more calm. There is no sense of direction. It has not been able to make a higher high. It has not been able to make a lower low. And actually, it's compressing a little bit. Those, to me, are important to look for because you know that the more that something compresses, and let's say we get a series of candles that close within the previous candle, it's a spring getting pressed and pressed and pressed, and at some point it will pop out, and then we can do whatever analysis we want to for whatever direction that may be. Generally, it will be in the direction of the prevailing trend, but I'm definitely a fan of looking for what's called an inside day. Normally, I look at them on a daily candle, so I would call it an inside day or an outside day. That's just if you have a candle that closes outside the range or inside the range. So simple ways of breaking it down. You know, there's a lot of different terminology, Tilly, out there. Do you use inside day, outside day terminology at all? You froze. I was going to say, she's really holding her pose over there very, very well. I think... Oh, there it goes. Reconnecting. This is a poor network connection. I have fiber optic here. So apparently I need to call my ISP and say, hey, we got a problem with this one. Let me see if I can get this one all fixed up for you. All right, so as I try to do multiple things here and get Tilly all reconnected here, not sure why that dropped like that. We'll do our best to get it back up. For George and others out there that are looking for longer-term time frame stuff, obviously breakouts in this situation, you're looking at that weekly candle breaking out of a range, a high or low. Those breakouts can give us, I guess, I'm not going to say a higher probability, but a line in the sand where we have to wait for, right, she just froze, where we have to wait for that close above that previous high. And the reason we're waiting for that is simply confirmation. Now, I mentioned in a couple other charts where you see something like a descending triangle or a symmetrical triangle. Essentially, all those patterns is a series of inside days where the candle is inside the previous day and the next one's even smaller and smaller. And that sort of compression to me generally could lead to a much bigger move or breakout one way or the other. Oh, yeah, guys, hold on one sec. Let me hang up on her, and I'm going to call her right back. You're probably going to be tortured with the desktop audio, so I will mute that for you, and I'll give her another call here real quick. I'm not sure what that internet connection was. Yeah. Let's see if we get her on here. One sec, guys. Abby, do I trade seasonality? I don't really trade seasonality. It's not a huge thing for me. A lot of times I love having my guests on and being able to identify, I guess Tilly's internet went down over there. The heat is so intense that we lost Tilly. That's a bummer. Well, we'll have to wait and see what happens here. Maybe I'll get her back on the program if she calls me. But something happened with our phone and connection here. No, not a huge practitioner of it. I am a fan of it. Two very different things. I believe there's a massive benefit to tracking seasonality. Not necessarily with S&P 500. Those types of things I do trade. You know, the sell and may go away and the January thing and Santa Claus rally. Those are all very important. What I don't spend time on is looking at the seasonality of crops. A lot of the softs and commodities. I think that there's a great competitive advantage if you study seasonality as well as the commitment of traders report. To me, that is huge in giving you an advantage in those markets. But honestly, I got so many other things to look at and so much stuff going on that I'm not really paying too much attention to that. All right. Let's see. Abby says, any comments regarding turn of the month effect where a lot of 401k pension money flows into the market towards the first few days? Not really anything that needs to be said there, right? I mean, we know that it happens. So you generally start to see the first few days of the month have a nice move to the upside because, of course, those 401k contributions are coming into those assets. Now, what I've been curious to see is if it would be any different now that so many people are unemployed and don't have those payments going into their 401ks or IRA accounts. Didn't seem to make a difference, did it? Right? I mean, it's probably because of the relief programs put in place that's just vaulting this market even higher. But normally you would think that it would be a little bit weaker right now in the first few days of the month because a lot of people out of work. Doesn't seem to have a big impact. So not a huge thing for me to follow. All right, I'm going to give her one more shot. Hope we get her back up here. I don't know why that worked that way, where we just lost Tilly. Strange days. It's wireless connections over there. Is she back?
Hi, everyone.
There you are. I hear you. I see you. Oh, we moved over to the phone?
Yes, because apparently maybe it has something to do with our network because my little guy in the other room is apparently having some internet issues as well.
You know, it's funny. I have a rule when I do the show. Nobody's allowed to be on the internet or even streaming videos when I'm at home, but I don't have a child to deal with. I have a German Shepherd, and he doesn't like to watch a lot of TV, so we're good.
Yes, got to give a shout out to Iowa.
There we go. My big boy over there. He's sound asleep watching me do the show, so there we go. All right, there we go. You guys get the cell phone action. Sorry for the little break there. It happens every now and again. Let's see. Harrison says, how long were you talking to a frozen screen? I get it, Harry. It was funny because I thought, boy, she's so deep in thought. She is fixated on her screen over there. Let's see. I'm going to run. I haven't really read through this one. We'll just do a live one as we go through here. Gemini says, I work for Penske, and I recently applied some of my 401k to a PAG stock. If I think the stock will drop, how can I sell my shares, or is that a question for Wells Fargo, who the 401k plan is through? All right, Tilly. So let's say someone's got a 401k plan. They probably have some profit sharing or something where they can get into PAG. I'll bring up the stock symbol for that so we can do multiple things here. Look at PAG. Here is PAG stock for those of you who want to follow along at home. That's Penske Automotive. So your company probably gives you a discount and allows you to buy these stocks cheaper than they would on the open market, which is a great thing. If you wanted to sell it and get out of it, what would they have to do, Tilly?
So each plan is going to be, I think, there's usually some restrictions, and it's very important to find out from the plan provider what changes can be made. And usually if you do any type of distribution of any type, unless you are, of that retirement age, there's going to be penalties and taxes and things to think about. But within the plan itself, typically there's usually 10 changes allowed per year. And as long as they're making regular changes within an allocation, going from either mutual fund to other mutual funds or corporate bond index funds, dividend plan products. So what specifically type of changes did you want to make?
I think we're just closing that out, So let's say, obviously, PAG, which is the Penske Automotive Group, has gone from, mid-20 or low 20s to $45. And I could see the wanting maybe to take some money off the table. Yeah, if you do that, it should be fairly simple. You should be able to call them, and it probably won't be instant. It might be a day for that to be executed, but that should be pretty easy for you to sell. But there are time constraints, you're right, or limits, with regards to how many changes you can make in a set period of time, and that's going to depend on your specific company. So talk to your HR department. They will be able to tell you all of that information.
Yeah, but yes, within the plan, doing some reallocation, selling stock, buy another stock, as long as you don't trigger any, taxable events and more than, say, 10 transactions a year, that's definitely recommended to do some, pretty regular changes.
Yeah, why not? Obviously, I don't know when they bought into this specific fund, but it's been doing great. So congrats, Gemini. You got some nice gains on that one. Penske's doing rather well. At least in the short term, right? You're still down from your COVID high, but all in all, looking pretty decent. Let's go to some more listener questions here. Let's see, what else did I have? I got to remember which one. So we talked about closing within the previous range for George. That's a good one. I'm a fan of it. It tells me a lot about the character of the stock or the market that I'm looking at. This one's from Natalia. Natalia says, do you look at the ES or other markets, for example, the dollar, top-weighted stocks, as odds enhancers? I understand the futures Globex highs and lows are important, but not sure how or if they affect SPY in stock in the stock domain, since actually the futures are the derivatives, but trade almost 24 hours. So there's a lot weighted to that question there, Tilly. First off,
I hear more than one question.
Yep.
So the top-weighted stocks are very good for seeing strength and weakness that could then hit the index. So if we're long the spiders, long the S&P 500 in any way, and those top stocks start to break down, and obviously the S&P is going to lag those more volatile stocks just a little bit. So the beta of the stock determines what rate of speed in which it's going to move faster or slower than another market, and it can give us kind of a heads up. If these certain stocks start to show weakness, then that's certainly going to confirm that the S&P is going to have some weakness as well. So it can be pretty good confirmation. And stocks are oftentimes commonly used to either confirm or to give us kind of a lead or a heads up. If we're trying to manage our index positions, those stocks can be very helpful.
Yeah, I agree. I think that there is a value to looking at multiple things, although I don't, for example, I guess right now you would say, shouldn't we be focusing on Tesla and Amazon as the market as opposed to the S&P, right? Because they're dragging it up. And I don't think that's the right thing to do. Certainly, if we see an abrupt change in Amazon or in Tesla, that could have a huge impact for us to the south side, right? They've been the lead dogs pulling this one up. Here's one thing that I would encourage you to do, as opposed to maybe looking at an individual stock or like, as I mentioned, Tesla and Amazon. I love using this comparison. This is something I built in TradeStation. I use it all the time. I mean, very, very regularly. It's a price comparison chart. I've shown you this one before, where I have it with ETFs right now, and you guys can see what I did is just anchored it on January 1st, and we can now scroll through to see what's the best performing things in here. And if you notice, the S&P is down 2.68%. That's this black line right here. But you have some markets that are just dominating, just absolutely crushing it right now. That is going to be technology. My guess is this lead dog here is XLK. Yep, XLK is number one, up 15% of the year. And right behind that, what makes up most of technology? Semiconductors. So SMH, up 9% of the year. So I like to use these as maybe my early warning signs. So if I start to see one of these top two roll over, that might pull this whole industry down. Now, I know that there's bottom fishers out there as well that would look at this and say, Jesus, are you kidding me? Energy's down 40% on the year? Yeah, it is, and it doesn't mean that it's a buy. This is something we talk about in the Strategic Investor course, which is the importance of rebalancing. Because think of it this way. Let's say I have, 1, 2, 3, 4, 5, 6, 7, 8. I have 9 ETFs on this screen, guys, and this is something Tilly will talk a lot about in her courses as well, is if we did an equal weighting on a $90,000 portfolio and put $10,000 in each one of these, right now I'm overweighted in XLK. And I'm very underweighted in the energy ETF. So at a certain point, and this is why it's great to set marks for you, is you'll want to go back through there and rebalance this so that these weightings now become more appropriate for your portfolio. Rebalancing is one of the most important things you guys can do for your long-term investments. But to go back to Natalia's question, it's not that I'm looking at top-weighted stocks or the dollar. Dollar I actually like to look at for market turns, but I'm really looking at what's leading the market right now, and if that stops leading, where might markets go in the near-term future? So that's how I would use that one, Telly.
Yeah, absolutely. And then, oftentimes in our portfolio for longer-term investing, we're diversified into many other markets, and using that correlation, especially whenever the market, we're in a stock market boom right now. We have been for over a decade. And keeping an eye on what markets could be good to allocate into when the stock market eventually crashes, we really have to do that comparison in real time. So, say the S&P 500 cracks again and it drops, 30, 40%, and, we start to have a lot more weakness and we don't come out of it as quickly. Really using those comparison charts type studies to look for a movement in gold and bonds and other products that we're going to have to allocate into sooner than later off of these highs.
Absolutely. Tilly, you trade on a bunch of different platforms. Frankie Shops says, and I quote, I'd like to start trading futures. Can anyone in chat make a suggestion on a good platform to use? Pretty small account trading, mind you. Do you have any preferences out there with regards to trading platforms?
So I think that I don't have any particular favorites. They're all typically going to offer some sort of functionality. Mm-hmm. And I say that, with kind of a grain of salt because, platforms make a huge difference. And platforms out there typically these days can offer us the flexibility of being able to use bracket orders that have a stop loss and a target sent initially with the buy or sell. So, TradeStation, Interactive Brokers, Thinkorswim, Trade Portal Futures, all those brokers, are going to, I think Tastyworks are going to have the functionality to offer us what we need. So I think it really depends on what you like. It's kind of like picking a car. All cars have brakes and a gas and a steering wheel, right? And you kind of have to try to, get in and try a few different platforms, maybe demo them, mm-hmm. and, really test drive them to see which ones you like. And, also more importantly is the margin rate. What kind of, size is your account going to be sized for? And starting small with very small contract size is critically important. And some brokers offer tremendous margin rates, mm-hmm. but oftentimes that causes traders to trade too large a size. And, some of my biggest losses have happened because I'll trade with too much leverage, and leverage is a great thing, but if you trade with too large a size, obviously you can get a really big hit. So, having that great rate is fantastic, but, it's like having a car and, sometimes the car is too powerful, and people get in accidents, right? You give a teenager, a high performance vehicle, and what happens? So those are a few things to think about.
Yep. Look, you can go almost anywhere and be opening a futures account. I go usually with people that I know. Tillie and I have both, I don't know if Tillie still has one. I have an account with Trade Pro Futures. They give some of the best margin rates out there. I know the guy that runs the company, Trey Lazara, just one of the most stand-up guys I know. So I would feel comfortable recommending that one. He gives amazing margin rates too. So check out Trade Pro Futures. It's all, spell it all out, Trade Pro Futures. Tell them TraderMerlin sent you. Who knows? Maybe get some special deals there. But usually they're pretty good. And they give you a variety of different platforms to choose from. You can, you have the back end. But a lot of times once you have the back end account open, you can use different interfaces. That's kind of where Clik is trying to enter that marketplace as well, where you can now use their front end and plug into whatever account you have. So that way you may have the opportunity to experiment with different trading platforms. I'm as clunky as it is, and a lot of people call it the Frankenstein of the trading world. I like TradeStation's platform, although a lot of my executions are done on different platforms. It's just the analysis tools I love on TradeStation. I'm so used to it, but as Tillie says, you got to play with different platforms to find out what works best for you. Let's see, Tillie, I got more questions coming through here live. I'm gonna read this one. This is a little bit different than what we were talking about today, and maybe we'll go back and look at some charts. But David J sent this one in. Let me share it with the viewers. I've just sold my first house and a bit of a profit on the sale. I'm currently living temporarily for low rent with a family while I look for a new house to buy. I plan on waiting a few months to actually buy the new house. What are the best low-risk options to keep the house sale profits while I'm waiting to buy again? So basically, where would you, if you had to lock away your money somewhere that was safe and not putting too much risk to your capital, what would you do?
So he wants to wait a few months to buy the new house. Low-risk options. So are you suggesting options as in just choices, not as in option positions to keep the seller profits while you're waiting to buy again? Well, having something liquid less than 3 months, then options, do you mean literally like money market account? So interest paying money market account is certainly better than cash. So for the most conservative, simply a interest paying money market account, typically 2%, which is, low, but it's certainly better than nothing. And then also treasury notes are shorter term. So if you want to, think about treasuries and things like that, I know right now that the rates are really low, but again, that's better than cash. But if you actually, do know how to trade options literally, using that capital and having it in an account where you can earn some income for selling out of the money at a lower priced area where you want to buy a stock or an index fund. Index funds are lower risk. That's a way to create income as well. And you can do that biweekly or monthly. And that is with the use of an option, literally.
Yeah, that's a tricky one. It's a question of how safe you want to be. Do you want to just have your capital ready for you at a moment's notice and not have any market risk? Then you throw it in a savings account. I know that sounds horrible, but you could go with somebody like Discover right now. I think is offering 2% for savings. Not bad. I personally probably wouldn't do that. I would probably do what Tillie is talking about, which is I would go more towards the options space, and I would be selling puts in the marketplace, generating some premium, and you could no real, by not taking on a ton of risk, you'd be making yourself maybe 1% a month without taking on too much risk. To me, that probably would be what I would do with it, but that requires you to understand the options selling process and also understand that you are committing yourself to potentially buying these ETFs, which of course you could just sell if you didn't want them. The other way would be to buy into bond funds, although bond funds I guess would be one way to get into them, or just individual bonds or CDs. So if you knew you were going to need this money for, let's say, 6 months, you could buy a 6-month CD. I think that you could do better by selling options than you would with a CD, but again, you'd have to know what you were doing, and that's the big challenge, because I think a lot of people don't understand what it takes to trade options, Tillie.
Absolutely, but that's all the reason to learn. So options are amazing, and for me, I'm guilty. I've been trading the same option strategy for over a decade, and I would say during this COVID, it really became present that if I were a little more experienced in the world of options, there are ways to do spread trades which are not going to have the obligation to actually buy those shares. That the offset of the anchor, and I know that terminology is stretched like Charlie Brown school teacher, but there are ways to earn income without having the obligation to buy those shares with the use of spread trades. And that's all the reason to learn to use options.
Yep. All right. Well, David, hopefully, congrats on the sale of the house, by the way. I, for one, if we did a housing show, I would say you probably want to wait a bit longer. I think at some point you'll see these housing markets sell off a little bit, and then you can buy back in. So save that money while you can. I'm sure there's plenty of opportunities. People want to know, Tillie, who's the cat? What's the cat's name?
Yes, the cat is Baylor, and I think she likes the sound of your voice, Merlin, because she knows you speak cat.
Wow!
Yes.
Glad that wasn't on camera, folks. If you watch my contorted... Jeff, are you asking about what the strategy of the to collect premium is? It's just selling puts. In that case, you'd be selling puts, saying that I'm willing to buy whatever ETF it is much, much lower. In many cases, you could put it at a price level that's so far out, you'd have almost zero risk of getting executed, but you'd still be generating some income. Tillie, do you have any thoughts on spread trading? I see multiple questions here on spread trading. Abby is asking what your thoughts are on future spread trading.
I personally would be more careful with the futures because of the volatility. I personally would be looking to use spreads more for the ETFs and stocks, and to use the offset not to have the obligation to buy the shares. And so if anyone's an expert on that out there, we need to get them on the show.
There you go. Yeah, I'm not a... it's really interesting. I have a friend who is in the futures industry. He works for a big brokerage, and he said, and this is what spurred my interest many, many moons ago. I just haven't gone down the path because I felt I'm doing okay. He says that the most consistent traders that he sees are spread traders. Yeah. And I thought, well, okay. I mean, this guy knows his stuff, and if he's going to make that kind of statement, then why is that? And it was interesting. I, for one, don't do it. I'm more of a directional simplicity kind of guy. Some people will say I'm being naive to just trade that way, and I could probably do better. I don't know. I'm happy doing what I do, and at this point, I don't have any reason to want to fix my trading style. I'm happy with what I do. And kind of like you, Tillie, you said you've been using that strategy for 10 years, and I think you're probably going to tell us, if it ain't broke, don't fix it.
Yes, and so I would say that unless we're looking to increase frequency, and like being at home with this stinking COVID, in our society, I think it's presented to us, a lot of time on our hands. So hey, if we had all this time on our hands, and if you're working from home more and you had time to do more trading, then we could always add more, tools, if you will. So I think it's like any other, profession, a contractor, someone who, paints houses. If you're home all the time, you might start doing some extra, faux finishing. You might get into, some finishings that are different than what you've been doing forever because you just have more time on your hands. Mm-hmm.
Let's real quick, since we got it up here. I know you got a bunch of levels on your screen. This is a similar layout that I built to the one that you're using for your weekly outlook here. You were targeting that 315.67, saying, hey, that's kind of overhead supply. We've now officially ripped above that one. Of course, we started the week above it. We've spent really 2 days chopping back and forth between that level. So now I'm pretty sure that we are now at that position looking for the 318.64 mark. Is that what you got earmarked?
I would say that yes, and I'm primarily using the 240-minute chart. I think it's a little more clear there. So there's been some great questions about different time frames. And the lower the time frame we use always has more noise. Mm-hmm. So we've seen a lot of noise on the 60-minute chart this week because the market is so consolidated. It did gap above the 315 area. And so on the 240-minute chart, we can see that the S&P is trading at 316.13. That's the last price I have.
Yep.
And it is now obviously trading higher for the last 4 hours, because I'm looking at 240-minute chart. So we would anticipate to see some accumulation form in the overnight session, and then to see some more strength coming in. And if that happens, then it will push it on up to the 318.64 area. That's right.
All right. Well, I've got the levels all mapped out. It's funny. I keep going back to your video and just making sure my levels look good. I like the last couple weeks calls numbers. They've been coming in pretty good. Do you enjoy doing this little video for us?
Yes, it really does make my week, I think, a little more interactive and more fun, because staring at computers all day with the cat, one reason I love teaching is because we get to go in a classroom or online. We get to be with you all and ask questions and talk about it, talk shop, if you will. So I love talking shop with you guys. I'm over here reading the chat. And for me, it's more of a, I grew up in a dance academy. I practiced ballet for over a decade, growing up, closer to 20 years, even throughout college. And so I was in a, classroom environment six days a week and always practicing. And of course, ballerinas and other types of, performance artist dancers don't practice by themselves. So it gets really, I think, extremely boring to manage a portfolio at home all by yourself. So I really love doing this weekly interaction. I love the questions. So yeah, really enjoying it. Now, keep in mind though, if the market does, break the low currently, that we've got that area of 310 down below. So tomorrow's Thursday, and I'll already be starting to update the areas for next week. So as it does push higher, we want to realize that there is some accumulation down below at 310.
One of our viewers, Darkstar, says, what's your thoughts on that 318 puts when it gets into supply? So you got that 318 level mapped out on the 4-hour. If it does get up there, would that be an area where you'd be considering, selling some puts? Or, buying some puts?
I'm not too bearish until we get a little bit of confirmation off the highs. So because there's so much sideways trading between 300 and 315, I'd be very careful trying to be too bearish. Because if this is a bunch of accumulation that's been occurring and it moves up very strongly, we might get confirmation for a short position, but I'd surely wait for that confirmation because, in a bull market like we have, the shorts can get squeezed out, very, very quickly.
Yep.
And trying to, we say you got two shooters, right? You got your short and your long. To be careful with the short in the in the stock market, right now as it pushes up higher.
Yeah, certainly you could, if you wanted to, go for that and take a shot short at 318. But again, you're going counter trend on a trend that has been just ridiculously phenomenal for whatever time frame you want to look at. You can look at it on the weekly, the daily, the 4-hour, and the hourly chart. Just looks really, 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 really strong. So now she tells you. All right, last one. I got to wrap things up here. Mike says, does Tilly think we are in a bear market or still in a bull market?
We are, in my ever so humble opinion, we are in a raging bull market. Okay. Even with a pandemic, we had a what I call a flash crash. The market dropped down at fastest move down we've ever had in history. So the plummet that it had during the pandemic off of the highs of 340. First of all, for the market to have traded up to $340 a share, 3,400 on the S&P 500 in the last 10 years is the biggest super boom we've ever seen in history. Mm-hmm. And so right now we're in the biggest super boom ever. And for the market to have recovered off of that pandemic low at this fastest rate of speed ever before in history. So it's likely that the market, given that the interest rates do stay low, and given that debt is currently being managed, I'm not sure how they're able to manage so many trillions of dollars of debt, but with all the corporate debt being managed with the low interest rates, whenever there is a crisis that will become present, likely to do with debt, that will cause the market to again likely become extremely volatile. Big companies out there, the institutions will sell, and that will likely throw us into another bear market. But until that happens, we're still very bullish at the moment. We haven't broken any lows at all, and the market is attempting to trade back up and retest those highs at 320. That's 3,200 on the S&P, mm-hmm. and those all-time highs at 3,400.
I agree. I mean, it's and Darkstar says it. Chart says uptrend until it doesn't, and it said aggressive downtrend, and all of a sudden it just switched, and now you're seeing this thing rip. Keep in mind, guys, that next week earnings season does start, so you could see some more volatility happen starting next week, depending on how these earnings numbers come in. But bottom line is, yeah, it's hard to go against this. It looks super strong right now, and you probably want to stay to that long side. As much as I hate to admit it, because I got a short position on, that's probably what we should be doing. But I've got another 2 weeks till I close out my position. That's per my trade plan, so we'll leave it at that. All right, Tillie, thank you so much for coming on. Anything else you want to talk? Are you teaching any classes coming up here soon? What's going on with you teach-wise?
We have a class here in Kansas City. I'd love to be doing more teaching because I love being around everyone. So I love doing the show with you guys. So happy to be here with you. I am reading the chat, but want to start staying focused, and love doing the weekly video. I am getting a copy of my book to send to you, Merlin.
Yay!
And, we're going to do a few giveaways. I know that there's a few of you here that already have the book, but we're going to do some special giveaways here and get them onto you.
There's the book right there. It's called The Fed Effect, the Centralized Federal Banking System. That's Tillie released that one a few months ago, and hope you guys go out there and buy that one and support Tillie in her efforts to continue to educate. All right, Tillie, well, thank you so much. I appreciate you coming on today. As usual, I will look forward to editing out your video on and having it all ready for Sunday afternoon for our viewers.
Awesome. Everyone trade safe, and I want to give a shout out to Joe there who was saying, yeah, the Fed owns the bank. Absolutely.
Fed is the bank.
Yep.
All right, Tillie, thank you so much.
Awesome.
All right, take care.
Bye, everyone.
Bye. All right, everybody, that was Tillie Allison Harris giving us some insights into at least answering some of the listener questions, because there were a lot more that came through, and unfortunately I just don't have time to get to all those. I have a bunch of stuff I got to get taken care of today, so I want to make sure I get this one done in under an hour. So sorry for those of you who were just expecting us to go on and on and on. We didn't. For those who might be new, I would encourage you to click the little thumbs up button there, and also the subscribe button with the little bell. That will help out this show. If you want to see Tillie's videos, I think if you click the bell on Trader Merlin's YouTube page, right next to subscribe, you can actually specify what you would like to see, and that will let you know when we post the video for Tillie, which is usually Sunday around 1 o'clock. I do a chart of the week on Saturday right around 10 a.m., and then, of course, we do the show live every day, Monday through Friday, right at 2 p.m. Pacific. So a lot of stuff being done here, and who knows, maybe we'll have some other guests help put together some programs and content for the channel as well. Hope you enjoy that. All right, let me go and wrap up here with a couple of macroeconomic pieces. Here's what you had happen out there today. The crude oil inventories number was interesting, by the way. I think you guys may have seen the crude oil chart. Let me show you a crude oil chart. To me, this was very noteworthy. Let's go and look at the CL here. Bear with me 2 seconds. I bring this one up because crude oil closed above that $40.60 something I'd mentioned and been talking about for weeks and weeks and weeks. And here's your daily of it. It still doesn't look like a confirmed break. I almost feel like I need to move this line up, and I'm like making more and more excuses. But really, that line of contact, you're right there. I mean, it just keeps on hitting it. Gosh, any day you're going to see that break. But anyway, that was the crude oil chart, and I actually thought it would go the other way. You notice that we had a gain today in crude oil, and when we look at the inventory numbers, there was a lot of extra supply. Normally you would expect price to rally up when you have a contraction in supply, but all of a sudden we went from negative 3.2 million barrels to a total of 5.7 million barrels positive. That should have had a negative impact on the price of oil, but it did not, which is obviously a good sign for anybody who's bullish on crude oil at this moment in time. That was today. Here's what's cooking for tomorrow. Really, for the U.S., you got a few announcements. Unemployment claims, final wholesale inventories, natural gas storage. Those are the main ones out there for the whole world. And I guess Eurogroup meetings are going on as well, which could send some ripples through the market, certainly with XLE. Sorry, not XLE. What's not XLE? Certainly with a lot of the euro-denominated Forex pairs. So there you go. It's crushing it, Chris. It keeps smacking against it, but it hasn't really ripped through it. Hopefully it will at some point here, and we'll get that nice rip to the upside. All right, everybody, that will do it for today. Tomorrow is, I'm not going to look at a lot of charts. Tomorrow is, let's get on the couch with the therapist type of day. Dr. Woody Johnson will be our guest tomorrow. If you got trading problems, you got something that's just bugging you can't seem to overcome, share it with us. The couch will be open. You feel free to talk to Dr. Woody Johnson on tomorrow's show. It would be helpful if you guys did have a psychology question or a problem in your trading world, or just something that you want to talk to a psychologist on. Send those on in. You can go to right below the video on YouTube and just type in your questions down below there, or you can go to the TraderMerlin page, which is, there you go, TraderMerlin.com. You can send your questions there as well. But putting down below the video is probably the best and easiest way to do it for the show and to benefit the show. So that will do it for today, everybody. I will see you tomorrow with Dr. Woody Johnson. Be careful tomorrow. We'll see you tomorrow. Take care.